There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi everyone, I want to talk about something today for all of you short-term traders. A lot of you find strategies on the internet or learn strategies from other training companies, and you think that if you have this strategy, you're going to be super successful. You're told this in webinars, seminars, all you need is this strategy or that strategy, and you're good to go. The truth is you're not. You're a long ways from being good to go to make consistent profitability. Oh, sure, if you get lucky on a single day, that strategy may work really well. You make a lot of money and you get all excited, you start trading a whole lot, and then suddenly you're losing a lot of money, and you have no idea why. One thing that you're not taught that you need to learn is that you have to adapt to the market conditions. So you have to be extra careful right now in understanding what you need to do. Inconsistent highs and lows can be very, very wide to the point where you don't even realize, if you just look at daily charts or intraday charts, that you're actually trying to trade a stock that is in a trading range. And this can be a huge problem for intraday traders, day traders, end of day, first of day traders, swing traders, momentum traders, and so on, because you keep very tight stop losses. And again, I will repeat, as I have in other radio shows, if you use percentages as a stop loss, it is not market makers who are whipsawing you out of the trade. It is HFTs, because they can see your broker orders before they are filled. That's required by law now. So if they see cluster orders of retail traders all trading the same stock with the same stop loss, they're going to hit on it because they can. And that is perfectly legal in the market. You want to avoid cluster orders. You want to avoid being part of the crowd. You want to trade independently, have your own trading procedures and process that is unique to you. And that's where strategies can really hang you, because a lot of traders try to use strategies because they think it's so easy, they don't have to work very hard, and they can just make $1 million overnight. Well, just like any other profession, trading and having a very high 6-digit or 7-digit income requires time, education, and practice. There isn't a profession in the world that makes a huge amount of money that doesn't require a very good education, a lot of skill development and practice, honing their skills that are needed for that profession, and the ability to adapt all the time to the changing business and market structures. And this is something that most retail traders don't even think about. Oh, I love this MACD strategy, I'm going to use it. Well, MACD is a momentum indicator designed for momentum and velocity markets, which are very, very brief. It isn't designed for a volatile market condition, which is what the trading ranges are. They're up and down and up and down and up and down, and one day up, 2 days down, 2 days up, 3 days down. And it's very hard to trade with a momentum indicator because it'll give you false signals all the time. False signal, false signal. Bollinger Bands also don't tell you the direction the stock is going to break out. It only tells you that there's a compression pattern that is going to break out at some point. So you need other indicators and other factors. That's all part of your trading process and procedures that we teach at TechniTrader, because we teach you to be individuals. Instead of being with the crowd and running like a bunch of bulls down the street, or all driving in the same pattern, which is easy for the opportunists and predators to exploit, and they do all the time, you're trading independently, and so you're not caught in that wave of whipsaw action and sudden losses that so many retail traders are experiencing right now. when the market is tough, you don't know what to do. You have no idea what's wrong. You want to blame the market makers. You want to blame the SEC. You want to blame everybody. But the truth of the matter is you only have yourself to blame because you don't have enough education and you don't have a trading process and procedure to tell you how to manage this particular market condition. There are 6 primary market conditions in our markets today, and 4 of those are sideways patterns. If you don't know how to trade a sideways pattern, that means that 80% of the time, you're going to be having trouble. So instead of having an 80 to 90% success rate, you're going to have a 20% success rate. You're going to have 80% losses and 20% gains. Now, some people will tell you that if you have a 40% gain and a 60% loss or a 50-50, the stock market's a zero-sum game, blah, blah, blah. They're all lying to you. This is not gambling. This is hard, cold skill. This is being able to read technical analysis, use the proper indicators, and adapt as the market conditions change so that you adapt and adjust to what's going on and you're not whipsawed out of trades and you don't get into weak trades because you want to trade because your broker wants you to trade all the time because the retail brokers make a ton of money off of you because they fill your order. And they not only make money on executing the order, the fees and costs that they do to execute the order, they also make money on the spreads. You have to adapt to the market conditions. You have to understand what market conditions are. It's not a market that just goes up or down. There's not just a bull market and a bear market. There are market conditions within those. Within a bull market, there can be a short-term bottoming formation market. There can be a short-term topping market. There can be a trading range. There can be moderately trending. There can be velocity momentum trading markets. They're all different types of market conditions. The primary ones are 6. We are the only company that teaches this. Everybody else only talks about uptrending markets or downtrending markets. Meanwhile, most of the time, the market is going sideways. 60 to 80% of the time, the market is going sideways. Stocks are going sideways. Indexes are going sideways. The magnitude of that sideways action tells you what market condition. You can have a very tight consolidation. You can have compression patterns. You can have platform building patterns that are wider but not too wide. You can have wider sideways, and you can have trading ranges that are super wide. In some trading ranges, they're so wide, they don't come up on the daily charts at all. You have to go to weekly or monthly charts to see that the stock has been moving sideways for over a year or longer. And you don't know this, so you're trying to trade a stock that is in a sideways, volatile condition because there's something wrong with fundamentals, or there's risk that the trade wars are going to cause problems for the stock or the company is nearing the end of its business cycle, or it's starting over and beginning its business cycle. There are many, many reasons why a stock shifts to a sideways pattern. Trading ranges in particular are indecisive markets with a lot of volatility because the market participant groups are disagreeing with one another. Not every market participant believes the market is going to continue to move up. A few think they are, mostly the retail crowd, mostly the smaller funds managers. The small funds managers are people managing less than $5 million for their fund. These are tiny, tiny nano funds. Some of them are minuscule. They're family funds that someone is managing and they don't have a lot of knowledge. So everything they do is highly emotional. Oh, I hear that this stock is going to go up because there's going to be a merger, but all of a sudden it gaps down and then they lose money and they don't know why. You have to learn the why, the what, the where, the when, and the how of the stock market. If you just use a strategy, you'll be lucky maybe, and you may be buying into a momentum market that is very sweet and easy, and you suddenly think, oh boy, this is a blast. I can make so much money, I'm going to mortgage my home, buy this $50,000 course, and I will make a fortune. And of course you lose everything, and now you have a home equity loan on top of everything. Don't do it. You don't need to spend $50,000 or $30,000 or $20,000 or even $10,000 on your education. But you need to spend more than $100, $200, or $500. There's a middle area, and you can get an excellent education. Our training cost is based on the same principles of a community college. I do this so that everyone could afford to buy our courses if they were serious about becoming a consistently profitable retail trader, trading like the professionals. It takes a commitment on your part and my part. Think about this. You need to adapt to the changing market conditions. Now, go to your strategies. Oh, sure, maybe the training guy who sold it to you told you it would work in every market, but it won't. You need to understand the strategy and what it was designed for. Option traders, there are almost 70 strategies. Most of them are designed for market makers. They're not even designed for you. Oh, the straddles and the strangles and the collars and the spreads and the whole 9 yards. But do you know which one is going to be the most profitable option strategy for a trading range market condition? I don't even think you're going to find it in any books. Go ahead and look, because we're the only company that teaches this information. You have to understand that the market and the professionals would prefer if you just turned over all your money to them. They can make a lot of money off of your money and they give you a small return on investment. That is their goal. The goal of the market overall is not to educate you. And unfortunately, most of the time, the people who are training are not professionals. They're not credentialed. They don't have a certification from a professional association. They are actually, if they're giving you stock picks or recommendations, they're doing something that is illegal. The SEC requires that all analysts and all persons who are recommending stock picks or stock recommendations have a Series 87. All analysts must have a Series 86 or the CMT, which is an approved professional degree that takes the place of a Series 86. So you need to really think about and ask when you start going out there looking for more education, what are your credentials? Oh, they may show you some sheets about how they have been trading and their stock picks are successful, but have they got a Series 87? Because the SEC requires it, not just of the professionals, but anybody recommending stocks. Most of the time, if you really do your homework, you will discover that most of the people out there, and there's hundreds of them, giving you a training strategy or some sort of training on the stock market or trading or day trading or whatever, have no certification and no credentials. That's like the blind leading the blind. And if they're not successful in their own trading that they have to teach, then are you going to be successful? Before Howard and I ever started this company, we were both retired. I retired very early in life because I could afford to and I wanted to enjoy life. And then Howard talked me into creating this company because we wanted to help people. Doing this is my legacy, and it's important to me. But I know that the majority of you will just go off and try to do it yourself, get rich quick scheme. But I'm talking to the few of you who earnestly want to be successful trading stocks and investing and realize that you need help. So for those of you who are serious about becoming consistently successful, visit our website, look at some of our webinars, check out what we do, check out our credentials, then go to our courses page, check out our courses, and then call to make an appointment to speak with a curriculum advisor. These are like college advisors who can help you decide which of our courses is right for you. There is a time commitment. You have a lot of things to learn, but you are investing in your future and the future of your family, your children, and your grandchildren. This information is not just a short-term commitment. This is a commitment that will change your life, the lives of your family, your children, your grandchildren, and great-grandchildren. That would be your legacy. So, developing a legacy for yourself and your family and your ancestors, how much is that worth? I'm Martha Stokes, and that's the radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.